Best 3-year CD rates right now. Maximize your savings in 2025. Best 3-year CD rates right now. Maximize your savings in 2025, looking for a place to park your money and earn a solid return without taking on excessive risk. A 3-year certificate of deposit, CD, might be a good option for you. These accounts offer higher interest rates than traditional savings accounts, allowing your money to grow while remaining relatively accessible compared to long-term investments. This article outlines the current best rates and factors to consider before locking in your funds. Understanding 3-year CDs. A 3-year CD essentially acts as a time deposit agreement between you and a bank or credit union. You commit to keeping your money in the account for a fixed period, in this case, 3 years, in exchange for a guaranteed interest rate, APY, that's typically higher than what you'd find with regular savings accounts. The trade-off: this higher return comes with reduced liquidity. If you need access to your funds before the 3 years are up, you'll face an early withdrawal penalty, often calculated as a portion of the interest you've earned. Top 3-year CD rates in November 2025. While rates have generally held steady so far in 2025, after significant jumps in 2022 and 2023, it's still crucial to shop around for the best deals. Sallie Mae Bank currently offers a competitive APY of 3.9% with a $2,500 minimum deposit. While online only, Sallie Mae stands out for its relatively lenient early withdrawal penalty structure. Synchrony Bank offers another strong option at a high APY with no minimum opening deposit requirement. Be aware that you'll pay back 180 days of simple interest if you withdraw before maturity. Bread Savings boasts a competitive APY alongside manageable early withdrawal penalties, though it does require a $1,500 minimum. Keep in mind, these rates are subject to change. For the most up-to-date information, always check directly with the financial institution. Deciphering CD rate trends. A snapshot of 2025, the Federal Reserve's actions heavily influence interest rates across the board, including CDs. In 2024 and 2025, the Fed has adopted a cautious approach, maintaining relatively stable rates with some modest cuts aimed at stimulating economic growth. This has resulted in CD rates holding steady or experiencing slight dips compared to their peaks in early 2023. However, there are important nuances. Inverted yield curve. You might notice that shorter-term CDs currently offer slightly higher rates than longer-term options like 3-year CDs. This phenomenon, known as an inverted yield curve, is often seen as a potential warning sign for economic slowdowns. It reflects investor uncertainty about the future and a tendency to seek more immediate returns in shorter-term investments. Future rate cuts. While the Fed has signaled further rate cuts are possible, it's uncertain exactly when or how aggressively these changes will occur. Projections vary among Federal Reserve officials themselves, so it's essential to stay informed about potential shifts in monetary policy. Should you choose a 3-year CD? A 3-year CD makes sense if you value stability and guaranteed returns. CDs offer a predictable way to grow your savings without the volatility of the stock market. You don't need immediate access to your funds. The penalty for early withdrawal can be significant, so ensure this timeframe aligns with your financial goals. Alternatives to consider: high-yield savings accounts, HYSA, and money market accounts, MMA. These accounts generally offer lower interest rates than CDs but provide more flexibility. Short-term CDs. If you want to lock in a good rate but maintain some liquidity, consider shorter-term CD options, e.g., 6 months or 1 year. The best choice depends on your individual needs and risk tolerance. Methodology. How Go Banking Rates selected top 3-year CDs to identify the best 3-year CD options for you. Go Banking Rates evaluated various factors including minimum deposit. We prioritized accounts with lower minimums to make them accessible to a wider range of savers. APY. Naturally, a higher APY is preferable for maximizing your earnings. Comparison to national averages. We looked beyond individual rates and assessed how they stacked up against national trends in the 3-year CD market. Product variety. We considered the range of banking products offered by each institution to provide well-rounded recommendations.